Oh, we're bearish. Oh, we're bearish. How's that bearishness taste? Tastes good? Yeah. SPY's about to hit 600. Well, all you guys were talking about being bearish, down at 500, 480 on the SPY. I was saying to go long. In today's video, I'm just going to talk some shit. Remind you guys why the fudge I am where I am. I'm just kidding. But in regards to this video, we're going to take a look at what the next steps are. Okay, obviously, a large move to the upside has already subsided. And now, predominantly, we have to take the best course of action moving forward. Now that a large move already happened, are we going to chase to the upside here? Or are we going to wait for a pullback? Are we going to be late bulls to the party? Or are we going to be early bears to the party? In today's video, I'm going to take a look at the large tech stocks, the SP500, the Russell, and the NASDAQ. All right, we're going to put everything together. And just in general, you know, take a look at the market. All right, so without further ado, let's get started with the video. So first and foremost, the market hasn't closed yet, but this is a rainbow chart of the SPY, no diddy. This is a lot of Fibonacci levels here. Okay, so first and foremost, we're looking at things on a daily time frame. The SPY, obviously, we're at 588, right? 588 to 590 is very, very major resistance. As you can see, these white lines and these white levels have been here for years. We have been monitoring these levels for a very, very long time. In the past, so these white, where we are exactly right now. In the past, they have acted as a very, very good support as well as resistance. All the way back to November of 2024, you could see that this has acted as clear-cut support and resistance. So now we are back to this level here on the SPY. Okay, very, very clear. Do you want to become extremely bullish here? Absolutely not. It's just a bad risk-reward trade to become aggressively bullish. Okay, so according to just the daily time frame of the S&P 500, doesn't really make that much sense to be excessively bullish at the moment. The NASDAQ as well. So the NASDAQ is currently at a downtrend level of resistance. This is the QQQ on a daily time frame. And as you can see, the NASDAQ is also here, 516 to 520, major level of resistance. You can see that these levels coincide right here. And we're almost exactly at the zone as well as a downtrend level here on the NASDAQ. You could see that this was a downtrend level from back in December of 2024. So as you can see, you know, this was a very, very major catalyst. What ended up happening was this started to break upwards. We held this level of support, right? We made a bigger move higher a bit, right? And then once we collapsed below this trend line, this downtrend level, the market and the NASDAQ just really capitulated, right? So now, interestingly enough, we are back to this level. After a major drop to the downside, a recovery, and now we're back to the major level of resistance that initially gave us a lot of bearish clarity, right? Because once again, it gave us bearish clarity, breaking below a major level of support, a trend line level of support. And not just that, let me just really drive this concept home without like just rushing through it. Okay, this trend line, the reason why, one of the reasons why it can be confirmed as a major important zone is multiple touches. Number one, multiple touches. It acted as resistance multiple times. 1, 2, 3, 4. Multiple times, right? Then once it broke upwards, it acted as support right here. Great. And then it acted as resistance again as it broke lower. So right here, it broke lower. As you can see, the day after it broke lower, what ended up happening? Let's zoom in here. We bounced. So right here, we closed. Great. Weakness. We closed below the trend line. What ended up happening afterward was that we ended up bouncing intraday to the level again. Buyers stepped in buyers tried to come in and say, hey, are we going to actually break down lower, or is this just a fake out, or are we going to reclaim the trend line and move upwards? It was not a fake out. We did not reclaim the trend line, and we instead saw follow through to the downside. So because this really, really verifies that this was an important trend line. So the reason why I wanted to really drive it home is because we are back to this trend line here. This is going to be an important trend line. So number one, the SPY is at resistance. The NASDAQ is at resistance. Next, the IWM is in the sky here. We're also at resistance on the IWM. You could see that this was a prior level of resistance. Right here, these prior highs, it's almost perfect sometimes. Like, this is literally, we're here. This is prior resistance, and look at where we are right now. All three major indices are at major levels of resistance. Major zones. Do you want to become extremely bullish while the market is tapping its head into a resistance level? Absolutely not. What you could end up doing is go light. You could go light. There's always three main things that you could do. Number one, go light. You know what? Let me just type this up. Number one, go light. Number two, wait for a pullback and then go long. And number three, go short. So here's the thing. All three of these are decent. The issue is that all three of these have decent, they're all decent ideas to take. So if you're extremely bullish, you could go light long, have a nice tight stop loss, and just play alongside the momentum. Number two, you wait for a pullback, and then you could go long. That's also good, because if you think the market is overall bullish, this is what you do. Number three, you could go short. You could go short with a tight stop loss. That's also a very good trade. All three of these are different choices to make. In no situation, all three of these situations, you have to be trading light. Okay? Because the market is in extreme weakness, extreme strength. You cannot go heavily into short, nor can you go excessively strong into longs in either of these two scenarios. The only time you're really able to go heavily into longs is when I start talking a lot of shit online, when I'm extremely bullish and I am adamant about buying dips. That, and just when you see the market is very overextended to the upside or the downside, that's when it makes more sense to be a bit more aggressive. Aside from that, can't really do that. And I hope this really makes sense, because just purely looking at these three indices, it's tough to be extremely bullish aggressively. Now, we could continue flying. That's why the first choice makes the most sense, and the second choice, just going long light makes the most sense. But we're at resistance. And personally, I wouldn't really want to go aggressively short. The only thing that I'm short currently is Microsoft. I'm just short Microsoft, and that's about it. But yeah, aside from that, there's nothing else really. And yeah, so with that being said, everything else is bullish. The market in general, everything is really bullish. So just be careful. The VIX is also trading below 20. So with the VIX trading below 20 like this, once again, the VIX being under 20, the VIX is very important. It has an inverse relationship to the market. When the VIX is rising, the market falls. So if the VIX is falling, it means the market is rising. So with the VIX trading under 20, which is a major level, VIX trading under 20 means the market is bullish. So we are currently under 20, means the market is going to be bullish. So we have to continue watching and monitoring the VIX. Overall, the market as a whole is bullish. We're at a level of resistance. In my opinion, it makes the most sense to essentially either go light long or wait for a pullback. Going extremely aggressively short doesn't make as much sense, but you know, that's just the way the cookie crumbles sometimes. You could, but just the easiest trade to make, you buy calls probably like 2-3 months out, nice and safe, and just let it ride. But aside from that, I hope you guys enjoyed the video. I hope you guys have had a good month, and love you guys. All right, so I'll see you guys tomorrow. I will see you guys tomorrow, because right now, after all of this, I'm getting back into it. After all of this, after everyone was like, "Oh, are you bullish? Are you buying the dips?" Tough. So I have to, just got to come back, reminisce a little, enjoy the shit talking a bit, go through some old comments maybe while I'm eating food. Go through some old comments of people just like, "Oh, you're an idiot, Hamid. Oh, you're so stupid." Make me feel better about, just that doesn't make me feel better. I'm a good guy. Anyway, I love you guys, and I hope I've been helping you guys, genuinely. Just put your egos to the side, and if you're wrong about something, be open to learning, and just, if it's not through me, if you don't want to listen to what I'm saying, listen to someone with a different opinion. That's the only way you're going to grow, because other than that, you just miss huge life-changing opportunities. For what? Because you think you know better? That doesn't work in the real world, and in your personal life, it doesn't work. So just apply the same thing to making money. All right, so I hope you enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you. Have a good one.